If you've been listening to the program, if you get the gold report, you know that bottom line, I felt it was a parabolic move. I want to read you, I'm going to read you because I want you to really wrap your head around this, folks. I'm going to read you the first page of the gold report on Monday. Okay, so this is Monday morning. The gold contract hit $18.96 this morning. We have the dollar trading at $74.12. This is a total disconnect, folks. The dollar is at the same price from last May, yet gold is trading $360 higher, or about 17%. The price correlation is important because gold is priced in dollars. When you have such a large run in either gold or the dollar, we should at least stay fairly close to the real value in mathematical terms. We are, no doubt, in the parabolic phase at this point in the metal. These never end well. Most times you will get corrections that are fast and furious. A parabolic market goes like this. The last 6 weeks, it goes up at least 30%, and it takes the swings out without volume. That's what it does. You're looking at the NASDAQ, what we did in the NASDAQ, 2000, bottom line, acceleration up was extraordinary. You did it. You went from 3,700 to 5,100, nonstop. January 15th, right to March 10th. And then what ends up happening, you implode. I learned from then, you know, what a real parabolic market was. Thank God I was on the right side then, too. Bottom line, what do we have in gold? Gold, folks, did the exact same thing. It went up. It was a run extraordinaire, but the bottom line is that it moved up 30% from the July level without volume as it basically took over the May 2nd high. So what it sets up is that it sets up a longer term, huge tradable market. And the gold market this is, okay? So, you know, it's going to be really intriguing to see how this shakes out. Now, if you are watching Tiger TV, or if even if you're not watching it, you're going to be able to see this later. What I'm going to do, I was around in the 80s, folks, okay? I'm going to put up the 78 chart going all the way over to 81. And I want to show you something, because it's absolutely incredible, you know, if you work with Fibonacci sequences, what the gold market actually did the last time that gold imploded. If you take a look at this, what we're looking at, folks, is this. I have a monthly chart up of 78 to 81. And the reason that I'm doing this, actually I'm going to make it to 83. The reason I'm going to do this is so I can show you the correlations that are inside this market. And it's absolutely incredible. If we take the fib retracement from the highs to the lows, what you're going to see is that the first bounce, you know, gold went from $873, folks, down to $486, and it did that in 3 months. Okay, so it got cut in half. Well, you know what it does, folks? It does a 61% retracement off that level. Gold goes all the way back up to 729. So now watch what it does, okay? And this is where, folks, you know, bottom line is that you have to pay attention to markets. You have to pay, when you've seen them before, it's a little bit easier, there's no doubt. But if you just pay attention to the fib numbers, you'll be in good shape. Now let me show you the second retracement. The second retracement goes like this. The second retracement, gold had gone from $729, that was in 80. It goes all the way down to $297. Then what does it do? Gold retraces all the way back up. It does a 50% retracement and goes to $513. Okay, so first we did 0.618. Off the second one, we did a 0.382. And that's right, my partner Steve Rhodes out here, he's gonna bisect and dissect this. There's no one more organized than Steve Rhodes. Let me tell you something, folks, okay? Hey, there's no one. I'm not kidding. I can't wait to see what his charts are gonna look like, because they're gonna be dynamite. They are. I gotta get him in here. Okay, so now we're going to do the third one. Now check out the third one. The third one, folks, what I'm doing is this. I'm going to take the highs of the contract to the lows, and what this is the high of 873, which was in January of 08, down to the low of June of 1982, and then what does it do, folks? It goes a 0.382 retracement from 295 all the way up to 511. My point in doing all this, folks, is that if you want to make money, markets are not over, okay? what you have here is a huge tradable market for a long period of time. Now, the gold equities were telling us this because the gold equities couldn't get to higher highs. But let me tell you something. On a technical basis, there's buys that are coming up, and they're coming up huge, and no one's going to believe in it, folks. On a fundamental basis, the gold companies don't need gold, folks, at 2,000. That's the bottom line. This is Tom O'Brien. This is